Okay guys, following on from the video I did earlier, it's now 9 o'clock and I'm looking to go EURJPY again. Why? It's my market of choice today. It's currently pushing up, but I'm actually looking to sell it. Let's flick this over and we'll have a quick look. So what we can see at this moment in time is it's clearly pushing up. It's coming off the bottoms here and moving back up into range. Now, if I drop this into the hourly, which is the monitoring chart, you can see that it's actually below the moving average moving down, and we have momentum this way. Now, when you have a conflict of interest like that, you've got to look at the bigger narrative of what the picture is. Well, what is the bigger narrative of the picture? Well, it's actually down, isn't it? So what we're going to do is we're just going to drop it down into 5 minutes. You can see it's starting here. There's no real point doing a candle count. 1, 2, 3, 4, 5. You kind of want your orders here and then run it back down into the blue line. That's the play that I'm going to take. So I'll just move that down, fire that in, and then I can just drag this up into position. Now, one of the reasons why I'm staying away from the current price is I want it to slam into me rather than me just go straight market. If I go straight to market, I've got nowhere to go. Now I have options. See how it's moved away? Well, I can follow those candles up, which I will do on a 15-minute chart. So what I'll do is I'll put that to the edge of there, which is fine. And then what we're going to do is we're going to follow them up till it triggers in. Now, the whole process comes from looking at this. Now, I'm looking for 7 pips. Okay. That's all the market's willing to give. So we'll just drag that up till we get to 7 pips, which is there. So it's like 35 quid, which is on this. There's good reason why I do this. I only take what the market's willing to give. Okay. Now, will it run? High possibility, but that's the first barrier and it happens to be 7 pips. So what I'm going to do is I'm going to keep the orders running into here if I can, and then I'll run it up. Now, if I move, just to kind of illustrate, see how it moves the target with it? Well, if I move it up, it'll pull the target up, so I can either take an easy 7 pips or I could increase the target. Now, I've got wind in my sails because everything's selling, so I could probably increase the target. Now, where did the trade idea come from? Because looking at the grids, you would think to yourself, well, hold on a second here, it's nowhere to be seen on the market pick. Strengths is looking a bit rough and one thing and another. Why euro-dollar? EURJPY and not euro-dollar? Well, it's very simple. Now we can see the New Zealand had the biggest gain and the biggest change of strength was the CAD. All right, I don't trade either of these, so I'm not that bothered. But if I go down my little list here, so we've got euro-dollar here. Well, they're clamped together, so there's not going to be a big deal of movement there. It's got a pretty crappy ATR at the moment as well, of 52. Then we look at pound-dollar, which is here. Again, same principle, sandwiched together. Next one is pound JPY. Now, that's pretty darn good. All right. And I was considering it. And then you got the EURJPY, which is here, and the US JPY. So JPY was definitely in the equation. The question is, which was the best base to take it on? Well, that's why you look at change of strength from the last data sample. Now, the pound and the US are both losing ground, as well as JP losing ground as well. So all 3 of them are going in the same direction. However, we have the euro going the other direction. So what that is, that's what's called separation. All right. They're moving like that. So that gives you a couple of opportunities. You can either go with the trade or you'll get the mean reversion. You've got 2 bites of the cherry. Whereas when they're clamped together, you've only got the breakout. All right. So it's just about opportunity cost and all of this sort of thing. And for me, this was the better of the ones. And I like the structure of the market as well, because it is a classic Kylie sort of playbook. And those levels will stay in play as long as this continues to sell. At the moment, it looks like it is. I think it'll push up for a little while. And I'm just prepared to follow the price up and then just catch it on the comeback. This is one of the better ways I find of trading. It's very peaceful. It's very easy. You've got to be a bit patient, and you're letting the market come to you. Because if you get the direction right, it'll forgive any entry. But at the moment, I'm just trying to get the entry right. Okay, kids, let's just play this one out and see how we get on. Okay, guys, that plan's played out. It's done at 7 pips, what I need. Just get everything off. Setting the tickets. There you go. So it's another 35 quid in the bank. What do I do now? Well, I just go make a cup of coffee, reset, do it all again. It's that simple. Now, I've got a dentist appointment this morning, 11:15, so I'm not going to do anything really between now and then. I might look at it again at 10 o'clock, see if it's reset. If it has, I'll put a trade on, let it run while I'm out. If not, I'll just look at it when I come back this afternoon. And that's how you build up a trade. You just chip your way through it. Now, there's various ways. I work hour to hour. It's just the way that I do things. Now, if you're working, you may work 4 hour to 4 hour. What that means is you look at 8 o'clock, see if there's a trade opportunity there. If there is, great, put your trade on, let it play out, reset, look at it again at 12 o'clock. Same principle, again at 4 o'clock, again at 4 in the afternoon, at night. So essentially, if you've got all day, you've got 4 signals. If you're just starting and you can see it before work and after work, you've got 2 signals. That's the way it works. I do this all day because it's my job. So I have 8 signals a day, but I don't take all 8. I just have 8 checking points. And that's the beauty of trading. The problem that I see all the time is trade too many assets, too low time frame, and you're trying to be in the markets way too quickly. Patience always beats rampage. And it's that simple. There you go, kids. Catch you soon.